Thank you everyone for coming this evening. So my name is David Wills. I am COO at Kenetic and one of the co-founders of Caspian. So as Secret mentioned, Kenetic, we're involved in a number of different businesses. One of them being the technology arm, which is really Caspian is where our flagship project within that arm. I'll just a little bit about my background. I came from the finance space. I was a trader for many years, worked at a hedge fund where I ran the trading desk, and coming into the crypto space, noticed or rather realized the lack of institutional grade tools for asset managers to really run their business in a way that anyone in traditional finance takes for granted. So in order to address this, rather than trying to build our own system, we decided to partner with the very capable folks over at Tora to take infrastructure that essentially had been built for about 15 years in the traditional space and port it into the crypto space. So really what we're aiming to do is, with Caspian, is manage the full trade life cycle, where you have a sophisticated order and execution management system, algorithms, compliance, etc., that all feeds through into a portfolio management system, which you'll hear a lot more about tonight. So what I might do is just have everyone on the panel introduce themselves, and then we can get stuck into it. Ben, you want to kick us off?
Hi everyone, thanks for joining us tonight. My name is Ben Roth. I run trading at Kenetic. Like David, I came from traditional finance background, so I was a proprietary trader early in my career. Spent the last 5 years managing a portfolio at a couple of hedge funds in New York. I come from a volatility and global macro background. I joined Kenetic almost, in fact, a little over a year ago, so I'm a veteran in the crypto space. And since then, it's been a bit of a whirlwind. Certainly, some of the problems that we've had are technology-based, and we're really excited to have Caspian, to have Tora as partners in Caspian, and we think that already it's solved a lot of our problems, and we'll continue to improve upon that.
Thanks very much. My name is Kevin Loo. I'm the Chief Strategy Officer of CryptAM. It's a pleasure to be amongst friends up on the panel. I think that I also come from the traditional asset finance background, so 15 years institutional asset management experience, always in fixed income, working for the likes of BNP Paribas, PIMCO, as well as Fidelity across South Africa, London, and Hong Kong. But before I actually joined finance, I was a software developer. I was a database administrator, developing in both SQL, VBA, and a little bit of C++ as well. Common tools if you're not picking fruit in the finance industry, right? So I pretty much have been investing, at least myself personally, for around about 3 to 3.5 years. My wife, she's been investing for about 6 years, so many of you that I know here will know the story that when I left my nice, comfortable, stable job to get into crypto, she was only more than willing to take the risk with me. So the other component I would say is that I worked in emerging market debt, and that's both hard currency and local currency. So what I like to do when I speak to people and provide education is talk about how the politics and opaqueness of emerging market debt, the illiquidity, and these lessons that you learn after trading years in sort of risky assets can be ported onto cryptocurrencies. So hopefully that's something that will come through tonight. Thank you.
Nice to see Kenetic is getting a lot of shout out. Oh, excuse me. Ryan Rabaglia, Head of Trading for OSL. We are Asia's leading digital asset brokerage. We service Alexa family offices, hedge funds, fund of funds, asset managers, private banking clients, and whatnot. My background as well, like Ben, David, Kevin, and probably 50 other people in this room, do come from traditional finance, so trading in some aspect. Doing equities and FX back in New York, where I'm from, and oil, paper, futures, and swaps here in Hong Kong previous to joining crypto. I've been in this space for about 5.5 years, employed through our parent company, and happy to be here.
Hey guys, I'm Thomas from OKEX. In that picture,
it's not me. So, but that's okay. I think I look better than that now. So like a bunch of these guys, I also come from a traditional finance background. I used to be a high-frequency trader at a iBank prop desk. And also like Bing, I also came from an IT background. I used to make video games at EA Sports. So I love technology. So I got into crypto about a year ago, and I felt that the market was not very efficient. There are many opportunities to be had, anything from exchange that can improve to news dissemination that can improve. And so now here I am.
Hi everyone, my name is Bing Lin. I manage a C Block Capital group. My own background is also from traditional hedge fund background. I started my career with a Tiger style equity long short fund in New York, and has been running equity long short fund for about 15 years. C Block Capital is part of the bigger group, which own multiple platforms in the blockchain space, including some of the names you probably are very familiar with. We own CoinSuper, BUN, which is a custodian bank, and also we own Dpool, which is top 7 Bitcoin mining pool globally. We control about 3% of Bitcoin mining capacity overall.
So as you can see, we have a pretty diverse mix of people, most of which it sounds like have come from a finance background. Go figure. So I guess I'd be curious to know, given everyone's sort of different perspective and you know the different parts of the ecosystem in which they sit, what is your current your firm's trading strategy, and like what are some of the challenges that you ultimately have in executing that strategy?
Yeah, sorry, so one of the things I probably didn't do very well, I did a great job of introducing myself, but not what CryptAM actually does. So CryptAM actually is an offshore investment vehicle. It's a multi-strat vehicle. The reason why we chose a multi-strat vehicle to exploit value within cryptocurrencies is because this market is moving so quickly, right? Fundamentals are probably not that well grounded, but you can't rely purely on quant because how much history do you have, and it's also subject to, let's say, influence. I won't use any other word, right? But in this case, right, you also want to be able to have something that can leverage on multiple areas of the cryptocurrency market. You don't want a product that people don't want, need, like in 6 months or 12 months. So that's why we choose a multi-strat. So with our flagship strategy, we're Cayman Island domiciled. We look to provide some, I would say 70% of our strategy is quant-driven. So through either smart beta, a little bit of quant arb. We rely quite heavily on technology to be able to deliver and execute our trades on exchanges. For the most part, though, also what we have to really consider is also custody. Right? So that's another angle I think that the market needs to be able to really grow up and develop. Because even if we're speaking to custodians, one of the problems we're hamstrung by is that they might meet the technical requirements, but not the regulatory requirements. And on the flip side, we might also meet someone who's good, vice versa, meets the regulatory requirements, but not the technical requirements. So how can these custodians and service providers really match our trading style? It's not a one-size-fits-all, not yet. And so that's one of our things, yeah.
So just on that point then, so presumably you've done a lot of DD on the custodians out there, and I guess this question is really for everyone. What is your view over the coming 12 to 18 months, some of the milestones that we're going to see in terms of custody and how the industry is going to take shape around that?
Yeah, I think for the most part, just keeping it succinct, not to hog the mic, I think that there's going to be much more custody providers coming in. If we rewind, I think many of us will echo the thoughts that 12 months to 24 months ago, no one wanted to help us, right? Forget it. You go to a lawyer, administrator, can't do it. Fast forward 12 months, 24 months, everyone's like jumping over us to help us, right? And I think that with custody, it's going to be like asset management. I'll sit in meetings and the guys will be like, okay, so what's your track record? 1 year, 2 year, 3 year? Custody, I think the same thing. You haven't been hacked 1 year, interesting. You haven't been hacked 2nd year, oh okay. 3rd year, let's do business. I think that is ultimately something the providers either from the technology side or the regular sleepy traditional side, when they choose to jump in and take that risk, that's something that they're going to need to build credibility around.
Yeah, they're balancing their kind of existing business risk with jumping into the new asset class. I think they're all very interested in getting involved, and it's just a matter of doing it at the right time.
Yeah, I think for the custody play as well, we've sort of been hearing this over and over. 20 panels in, still talking about custody. That is not happened, or not by anyone we haven't heard of in the middle of Kentucky. In the US, that props up overnight. But in the end, yeah, I think it is the biggest play, of course, regulation and custody. People having meetings and sitting around and talking about it, but actually putting it and deploying it is a completely different, topic. So I think it is going to be the main concentration for how people actually act in this space. And until we actually get there, it is going to be the obstacle, whether we think it should have happened already or not.
Ryan, you have a fairly unique perspective in terms of like who's actually trading crypto out there, and presumably your business and customer base has evolved a lot over the last 12 to 18 months. You want to talk just a little bit about the types of customers and flow that you're seeing, and sort of some of the unique challenges you have as your business evolves to institutionalize and deal with all of the new demands that you might have?
Sure. So I mean, I think once again, it is that custody part of the business, but a lot of the main people that have sort of taken the plunge or dipped a toe didn't really care about that function of the business. Of course, they care if things go wrong, but previous to that, they're willing to take that risk and actually fire off some trades. And a lot of these would be the hedge fund manager themselves doing it in a personal way rather than actually putting the hedge funds on the line. I think that's a pretty common step that we've seen, and you can see that across family offices across Asia as well, from the asset managers, private banking clients, and whatnot. So yes, that we did have that demographic shift where it was the high-end retail people who could actually pony up $250,000 per trade to the guys that'll drop 20 bucks and not worry about 200 bips. So we have seen that sort of that migration, or you could call it an evolution. It is inevitable. It is here, and whether the market's up or down, they're always looking for something.
And then from a technology perspective, what are some of the challenges that you guys face? And we can jump on to dig in Thomas after.
Sorry. Okay. Technology perspective. Caspian, okay, it's about that time, right? Caspian, yes, of course. It is that institutional part of the business that we need, that everyone our counterparts are demanding. So we've already set the bar at a very high level of how we interact and sort of deal with our counterparts. And it demands that we actually deliver that in a performance-driven way, and that is through our systems and our software and our infrastructure. We are pretty thankful to actually have infrastructure built out for almost half a decade, which is an odd thing in this space, so we're already ahead of the game. Caspian already sort of topped up our drink for us.
Thomas, any thoughts from you guys?
I think in terms of Caspian, as an exchange, we're very happy as long for more people to come into the game. Like once we have these custodians solutions, then there will be more trading, and then eventually they will require more liquidity. And how do you get more liquidity? We're going to be needing like algos, like traditional algos, like TWAP, VWAP, and all these connectivities within all the exchanges. So from exchange point of view, we're very happy that people are connecting to our API or just connecting to our exchange and just trade away.
And from an exchange perspective then, what does this concept of institutionalization mean for your business in terms of your customer and how you're trying to evolve your tech, and sort of, if you look out 12 months, what you think your business will be like then, what are some of the challenges that you think that you need to overcome to get there?
I think one of our main challenges is, if you're familiar with like APIs in general, most big guys will have done that's most likely they will use some APIs to trade, for example, futures or VWAP, like on their internal algo. Some of these problems we have is the trade reporting is not very up to par yet. So so going back, we would love to do better trade reporting, better trade P&L analysis, better position analysis, risk management. But so far as an exchange, we just haven't been able to attack that because as an exchange, OKEX, what we're good at is finding the retail investors, making sure that they're easy for them to trade, doing their KYC. And so far, these institutionalized methodologies, at least for OKEX, is a bit of an afterthought. So there's enough in the APIs, enough on the website for you to do all your reconciliation. But it's by no means up to par yet. So I would see in 12 months' time, we're going, like even ourselves, we're going to be keep improving our GUI, improving our infrastructure to provide these type of services. And then something like Caspian will definitely be able to make it into more like a standard format, and then I'll be able to help bring in flows between different exchanges. So we're happy for that.
Bing, you want to talk a little bit about what you guys are up to and how your business is
Sure. Within our group, which is CSF and UCF, we are trying to create a complete...
What is a CSF and UCF?
UCF is basically our brand name in China. It's basically an online wealth management company. And CSF is our brand name in Hong Kong and overseas, which is a fintech company doing payment, online lending, and also blockchain. So within our group, we are trying to create the complete ecosystem for the blockchain industry. And for the custodian business, we are one of our subsidiary, BUN, as I mentioned, is providing that service. The competitive advantage we have is we have over 250 programmers and also about 100 people focusing on the hardware side. And we produce industrial grade wallet for the crypto custodian business. And BUN has completed its ICOs and already have outside customers for the industrial grade wallet product. So the customer base is really growing very fast. We think that's a very promising area for us to establish our presence in the blockchain business.
Ben, you've been at the coalface, trying to build out a lot of our internal technology to deal with some of the challenges of trading crypto, both across our markets and trading business. You want to just maybe tell the audience about some of the obstacles that we've faced and how we're, dealing with them?
Sure, yeah. The first thing that sticks out at you if you try to trade in somewhat of an automated fashion is that you need to write to all of the APIs, including X and the other 20 venues on which we trade. And the documentation, some of these don't even have documentation written in English, I believe. Yours is one of them. We're very recently. There's in the Korean exchanges, a lot of them are only written in Korean, and not just that, some of the technical specs on some of these exchanges are just either incorrect or simply missing. So just gathering all of the information and putting it in one pile is an enormous challenge, and then just putting together the manpower to be able to go and write these and test them and keep up with all the changes and all the improvements, all of the improvements that the exchanges put out on a fairly regular basis. It requires a team of people, and there's a lot of participants in the market that don't have 15 software developers that they can just go and deploy, on demand to get them up and running, including our business. So that was probably the first challenge that we had, and that's over and above just building out the strategies and coding the strategies themselves. This is just a purely technical challenge. That's something that we've struggled to solve for the past 12 months, and I think a lot of people are in the same boat.
Great. So can I actually get a show of hands here? Who actually works in the crypto or blockchain space full time? And of those people, who are actually involved in trading cryptocurrencies? So, interesting. So about a third of the audience. So I guess, what always strikes me about the industry that we're in, it was really the origins of it came from, this cypherpunk movement, very libertarian roots, and then it was largely driven by retail participation, which I think the last article I read had it about 84%, with institutions, very small, like only anywhere from 5 to 10 billion in what is a, over $200 billion market cap right now. Yet there's this theme that we constantly keep hearing, that for this asset class to thrive, it needs to institutionalize. So my observation this year is there's a lot of building blocks happening in the background, whether it's announcements like the Backed Exchange, the parent company of the NYSE ICE, or various different custodians like Northern Trust or the Kamainu consortium between Ledger and Global Advisors and Nomura. So I'm just curious to know if the panel's thoughts, like everyone's involved in the space now, but like what is your vision over the next couple of years for the asset class? We're obviously going through a very turbulent time right now, which is really testing whether a lot of these 400 or so funds that are out there, whether or not they're going to be around. And as we sort of go through this evolution, what are the key barriers that we ultimately need to address to create an on-ramp, a frictionless on-ramp for some of these institutions like endowments and pension funds to come into play? So yeah, just thoughts around barriers and where you see the things evolving over the next 12 months.
I think there's a bright and a dark outlook to both of these, depending who we support and who we want in this space. So then from a custody perspective, sure, you may have the State Street and the Bony actually providing custody. So do we actually want to go in that direction? I think it's necessary for this institutional hurdles to get over, but a lot of these libertarians and cypherpunks would say, no, I do not want that. Unfortunately, they don't write the rules anymore. I think on the bright side, it's a massive influx of volume, whatever the figure is, hundreds of trillions on the sideline, whatever it is, it's not enough. We need more day after day. I think that's the bright side. The volume increasing, of course, margins will tighten. So depending on what play we're working, if you're working exchange plays, if you're running an agency business, if you're doing stat arb or whatnot, each of those things are going to be affected by that, and the more players that enter the space will actually clamp down on what we're hoping for from the space. So I think on the bright side, yeah, it's a volume thing. It's what we've wanted from the beginning. It's that massive influx. It's those wild swings, more wild than we're used to. And it's on the dark side. It's potentially having those quote unquote overlords come into the space and sort of take away what we've been building for so long.
All right, I'll take a bit more of a sort of a macro view on this, given that's like my training, right? And centralizing a decentralized asset is a dirty, dirty, dirty job, but someone's got to do it, right? So fund managers, we're doing it because we provide that centralization or trust. Again, the libertarians, cyberpunks maybe, wouldn't really agree with that. Same with custody, so forth. And the other component I'd say is education, right? I mean, everyone here, it's quite interesting when I speak at events, you ask the question, who knows or works directly in blockchain, who actually trades? So I'm very interested to see that, half the crowd probably puts their hand up to say they work in blockchain, and maybe only a third or half of that actually trades or actively is getting involved, right? So that tells me that even in this room itself, there's probably a little bit more to go in terms of increasing risk tolerance and also increasing education about what you're willing to buy and how you're willing to actually extend yourself. And from the education perspective, why are people so happy to invest into stocks, commodities, emerging market debt, developed market equities and debt? It's because they have 150 years of traditional finance, academia, right, to support that. And they have a world map, right? So they can see that the US is very different from Europe, and even within Europe, you've got emerging market Europe. And even if you go there, you go to frontier Africa, right? Which is a pretty extreme asset class. And then you get to crypto, right? And then when you're trying to develop a mental mindset about how the sort of crypto universe works, you haven't got that academia, and you haven't got that sort of world map ultimately to sort of guide you. So I think that's one of the things that we try to do, is present that mental picture and image, and that also that if you go across to any of these emerging markets or developed markets, in any of these countries, and if you travel, you're going to know that the language is different. You're going to know that the customs are different. You're going to know that the currency is going to be different. Same as you go to any chain, coin, the technology, the community, the infrastructure is all going to be different, right? So I think that's something both not only the mass market needs to get, but also what the institutional guys need to get. And that's just something that we all in this room kind of need to do.
So coming from traditional asset management background, where in my view that I firmly believe that crypto asset will have a space in asset allocation, extremely due to its disruptive technology feature, and also due to its low correlation to the traditional asset. I think right now what prevents the institutional investor like endowment fund, pension fund coming to the space is really due to its high volatility. I mean, recently my team did binomial tree option pricing on especially on the Bitcoin, and we find out actually a lot of people participate in the Bitcoin trading because of its high volatility. But I think the institutional investor cannot tolerate that kind of high volatility. What we find out is monthly volatility about over 30%, just too high for institutional investor. So what we're trying to do at our group is we want to figure out how to reduce the volatility by using derivative, how to using the modern portfolio theory to create the efficient portfolio frontier in order to capture the upside of this asset class while reducing the volatility. I think the volatility, once we resolve the volatility issue and also make much better prediction about the volatility trend, and we think the institutional investor will really love to invest in that space.
For me, I don't think any one of us here needs to be convinced that crypto is kind of the next big thing, or it is the next big thing. But for me, I would kind of reiterate what Bing and Ryan has said. I was thinking what Ryan said, something about the institutional guys. I think once they start really coming in, what we're going to see is that trading margin in general, if you have alpha or if you're doing carry trades, those are going to shrink significantly. And then also on return what Bing says, like because the traditional in the past 1 year ago on one of our competitors exchanges, you could easily make like decent money trading carry trades. Nowadays it's much harder. So we're really seeing like slowly, little by little, these institutional guys are jumping the hoop. Like first smaller family offices, first like 1 or 2 single traders, then bigger hedge funds. They're each coming in, and we can see this directly by like, for example, in the futures market, the bases have shrunk significantly. You can see the markets are more efficient. The order book is thicker than before. So I think this institutionalized thing is coming, so it's going to be a double-edged sword for a lot of us. We're going to see a lot of competitors. All of us are going to see more competitors in this space, which is a good thing. But then hopefully, because the pie grows, that it also becomes a more interesting market.
I just want to elaborate on one more thing about how centralizing a decentralized asset class is a dirty job. The one interesting thing I would say is that a tool that could possibly help enable institutionalization is like off-chain settlement, because you can just be, let's say, sitting off-chain. You can, let's say, own or be allocated a huge block of crypto, just transacting within yourself, and then only, let's say, squaring off net positions actually on-chain when the actual time comes. So I think that off-chain or, let's say, macro chains, if you will, or multi-chains that facilitate interoperability, that is also something I think the institutions are going to want to see, because hopping and lowering latency between chains is quite important.
Yeah, what I'd say is ultimately, as soon as the endowment fund managers and the large hedge funds and private bank guys, as soon as they're not worried about losing their job for either trading crypto or recommending crypto, that's when you're going to get a big take up in the institutional space. Like right now, a lot of people are waiting for somebody else to step up first. There's a little bit of career risk there, and you're getting the players at the higher end of the risk spectrum. So the ultra high net worth guys and family offices who are ultimately playing with their own money, so they've got nobody to answer for. They're dipping their toes in, and gradually we're going to end up getting Harvard endowment and Yale endowment, they'll probably be the last guys at that point. And the process is definitely getting some of the recognised custodians in the space, and right now no one really has an answer for how that's going to work because of this whole decentralised asset, with a centralised custodian. Nobody's quite worked out the solution for trading, settlement and management of those assets.
Thanks, everyone. So we have a few minutes for some questions from the audience. Does anyone have any questions for our panel?
Yeah, sure.
So this is Senghu. I am also working for traditional hedge fund here in Hong Kong. So I have a question to Ken. So when you mention your strategies you learn from your traditional hedge fund or asset management, you mentioned smart beta. So my question is, how do you define a beta in the world of crypto? Because that's those questions. My ultimate question is, so you learned different strategies from the traditional fund, and when you're coming to the crypto world, what is the challenges that you see? That my guess is you can't really apply your experience mapping to the crypto world. So your existing strategy have to be defined, just like beta or whatsoever parameters. So how do you deal with that?
Well, I'm going to answer that directly and say that exactly because there's no measure of beta, I'm kind of here to tell you that you can create your own, and it's all about how you are able to market your own version of what beta is, right? If we both agree that measuring beta is very tough, right? Well, then it's a greenfield for opportunity, isn't it? It's a greenfield for opportunity to create thought leadership. It's a greenfield opportunity to look both horizontally and laterally to say, these are my used coins, these are my traditional value-add coins, these are going to be my blockchain coin, these are going to be my off-chain, this is going to be my IOTAs, tangles, hash graphs, and all different, let's say, and I can even group it by region, because we know that some regions, as this market is 24/7, if a coin is much more popular, well then how about we actually just say that that coin is all US, and that bunch of coins all trade with mass volume when like sort of New York sort of kicks open, right? Regardless of where that chain or that coin's actually even been sort of created. So I would propose to you that you could get involved by proposing ideas and actually creating a smart beta. Now our version of smart beta would just be to say, don't take down say coin market cap that you see out there. We have looked at it and optimized for Sharpe ratios, Sortino ratios, any other kind of back test as much value as that can provide, right? And would say, baking in a future where we are going to see inflow and there's going to be a tide that lifts all boats. We cap crypto or any major crypto at 33% and then proportionately diversify into the remaining, let's say, top 25. And you know, whether it's top 10, whether it's like top 50, I would say after top 25, liquidity starts to get very, very dry, and then it just becomes like a method of academia, right? But I'd say, yeah, you can slice it any way, right? You could go with utility power infrastructure coins if you wanted to, if your investor was so inclined, right? If your mandate as a hedge fund is, I only do commodities, well then go for asset-backed gold and platinum and knock yourself up. You're going to find a lot of providers out there, and all we're talking about is just tokenizing that equity or that debt on chain. There's enough for you there. Yeah.
Thank you. Any other questions? Great. Oh, we got one in the back. Project.
Our perpetual products, I'm just trying to think how much details I can get into that. So IO is going to be an inverse for now. So really just the funding, in terms of funding, we're going to be optimizing it for the current field market. So our competitor, so they also have a perpetual swap, so everybody knows that. So when they align their system, it would have been more for when the market condition, what the market condition was 1 year ago. So I would say we're going to align our products to be something that's within this year. And one of the big thing that will separate our product is the fact that you can directly do index arbitrage directly on OKEX, because you can buy and sell spot USDT against future. And secondly, we have 3 other, for example, Bitcoin, we have 3 other, the weekly, the bi-weekly, and the quarterly futures. So adding perpetual to the mix, you can directly do pick up some carry trades and share some. You can do spread trading, essentially from because one P&L can be shared from one contract to the other. So that would set us apart. Those 2 things would set us apart.
Great. Well, I think that's about all the time we have. Can I get a round of applause for our panel? If anyone would like to learn more about Caspian, we have our very capable product demo people over in the corner, Jethro and Patrick, as well as if you want to learn more about our ICO, you can go to Caspian_tech, or certainly grab me or any other Caspian member here tonight. Thank you very much for your time.